What's up, guys? My name is Samuel, financial market analyst. In today's video, I will be breaking down key chart pattern with Fibonacci retracement to capture potential reversal scenario. Now, we are looking at USD JPY on the 4 hours time frame, and we shall be using MACD indicator in conjunction with Fibonacci to determine a trend reversal. First and foremost, let's draw the zones, the trend line and the support zone. We have a descending trend line here. And we have a ascending trend line. Let's draw a support zone. Nice. Now let's go ahead and add the MACD. Okay, sorry. MACD. We will use the default setting. Now, the MACD indicator is one of the simplest and most effective momentum indicator. Trading the MACD double divergency, if done correctly, it can provide you with the real edge in the market. Now, when the MACD is on the 0.00 line, do not take short or long position. When the histogram is below, this is the histogram, is below the zero line, and the MACD line is facing down, it indicates that the price is falling, like here. And when the histogram is above zero line, like here, and the MACD lines is facing up, this indicates that the market is raising. But take note, not all the time. Now, let's go ahead and add the Fibonacci. We will be using the Fibonacci as a predictive technical indicator to attempt to identify where the market will be heading next. To add the Fib, we need to identify the significant swing high and swing low. And we shall be focusing on the magical area, which is 61.8. Nice. Now, what we shall be looking at is rejection and pullback. That's what we will be focusing on. And we can clearly see the price is at the magical area, and we have a rejection, this green candle. This confirms that this is a rejection. Now, when we look at the MACD down here, the MACD has not confirmed. The MACD is telling us that the price is going down. The price is bearish. Now, let's wait and see what happens. Now, the market has come back to the golden ratio and we can see a rejection, this green candle. When we look at the MACD, the MACD is telling us that the market is raising. The MACD has confirmed that the market is starting to go up. If we take a look, we can clearly see that the market is in an area of confluence here. The market is in the magical area and coincides with the ascending trend line and the support zone. Now, this will be our entry point. Let's go along here. Now, the stop loss should be slightly below our previous low there. Our first take profit should be somewhere here, and our second take profit should be here, and our third take profit should be all the way up. No, let's lower this here. This should be our second take profit. Let's set this trade and see what happens. That is the stop loss, and this will be our take profit. Nice. Now let's see how this plays out. Okay, our first take profit is hit. Now at this point, you take your stop loss to break even. Bring your stop loss to entry. Now let's see if we will hit our third take profit. At this point, you can use a trailing stop so that when the market reverses, you have your profit. All right. Okay. Our second take profit is hit. Let's see if we can hit our last take profit. Our third take profit is also hit. Now, I hope this works for you guys. That's all I got. I'll catch you guys next time.